A hearty welcome to all of you on our YouTube channel CS Sansaar. I'm speaking Stella from the CS Sansaar. So today we are going to talk about very interesting topic which is a IAS 24 decoded. And for that we have a CA Suchitra ma'am. So first of all ma'am, thank you so much for joining us and also giving your valuable time. Before I begin, I request to all of you those who are watching us to subscribe our YouTube channel and also do not forget to like, share and comment. Now ma'am, I would like to invite you to share the thoughts on the today topic.
Thank you very much, Stella, for wonderful introduction. I am very much overwhelmed to be back again on this channel. Today, my topic is IS 24, which is covered under ACCA UK IFRS standards. It's your guide to bulletproof related party reporting. Here, we are basically trying to understand how transactions are being entered with into the related parties and what kind of disclosures are required. This standard is trying to insist upon clarity and you can say transparency in the related party reporting. Let's start with it. Now, let's see what are the learning outcomes of this standard, or you can say what are the objectives of this standard. It states that first and foremost thing that you have to understand is what is the meaning of the related party. Then you have to understand potential to mislead users when related party transactions are accounted for. And third, the disclosure requirements in respect of these transactions. Now, let's look into it one by one. First and foremost, we need to understand why do we need related party disclosures. Nowadays, we see that there are transactions entered into with entities which are very close to us. The reason could be tax planning, it could be evasion of taxes, it could be diversion of funds, or the companies have simply been formed to manage the funds of the other companies. So, the investor has to be made aware that these transactions have been entered into for some purpose, and it is not in the normal course of business which we enter into with the other parties. Say, for example, company A is selling goods to company B at a price which is higher than that which is available in the market. So, why is company A selling to company B at high price? Because company A is having 75% stake in company B. So company A is the holding company B is the subsidiary company. So if you see, the profits of company A are overstated to the extent of this transaction. So the users of the financial statements need to be made aware that this transaction has happened and it is not at the normal price at which it should happen with the other enterprises. So, for this purpose, disclosure is required. The related party relationship affects the volume and decision of one enterprise for the benefit of the other enterprise. And if you see, IAS sheds light on related party transactions. Disclosures ensures transparency and fairness in the financial reporting. The whole purpose behind this transaction is you have to see the substance of the transaction and not merely the legal form in which it has been entered into. So it is basically lifting the wheel and seeing behind what is happening in the transaction. Now, let's see this diagram. Here, first of all, what we are seeing over here is there's a related party transaction. So in this transaction, what is it all about? It is transfer of resources or obligations between the reporting entity and the other entity. Now, who is the reporting entity? The person who is preparing the financial statements. And who is the other entity? It is the entity with whom the related party is entering into. It's basically the related party with whom we are entering into the transaction with. It could be anything. It could be transfer of finished goods, it could be transfer of raw materials, it could be transfer of say assets, it could be transfer of property, it could be transfer of services. So all these transactions are covered under related party transactions. Then we are entering into transaction which is entered into terms which are not at arm's length price. Now what is arm's length price? This we are going to see in the next slide. Let's see that. Arm's length prices, very often the transactions are incurred at cost or at profit margins lower than that with the outside agency. So they are set not to be made at arm's length price. This affects the financial results of the group company. So if you see, basically what is happening over here is we are entering into a transaction which are not at the price at which we would normally enter into with other customers in our uh, business. So, for example, H Limited is selling goods to S Limited. H Limited is the holding company, S Limited is a subsidiary company. S Limited is having material X which is slow moving and outdated. And if it goes to sell in the market, he will sell it for 100 rupees, but he's selling it to us for 75 rupees. So, just because of the mere existence of a relationship, we are being forced to buy it from H company and we are getting it at low price. So, it is beneficial for us. But so the item is outdated and it is slow moving. The same item we could get it from the market, but it would be at higher price. So this kind of transaction needs to be disclosed, that we, why? Because it is affecting the income statement and the financial statements. That's the only reason why we are disclosing this transaction, because it is not at arm's length price. Now here, see, the in this chart it is being clearly referred over here that it is influenced by mere existence of relationship. Now let's go to the arrow over here where it says that it distorts the financial position and profit and loss account. So that's the real reason behind why we are learning this whole standard. Now let's come on to related party and related party transactions. Related party transactions I've already discussed with you. Related party is the ability to control or exercise significant influence in making financial and operating decisions at any time during the year. It is not that it has to be as on the last day of the year or something. It can be any time during the year. So basically, if you see, it could be, now who could be a related party? It could either be an individual or it could be an entity that is related to the entity that is making the financial statements. Now there are lot of listings given by the standard to show who is the related party, and these are all the related parties which can be covered up by the standard. If you see, it says related party could be any of the following. The entity and the reporting entity are the members of the same group. Either entity is an associate or joint venture of the other party, or they are joint ventures of the same third party. One entity is a joint venture of the third entity. It includes a person who or has a close family member who has control or joint control of or significant influence over the reporting enterprise, or is a member of the key management personnel or its parent. See, it could be a member of the reporting entity or it could be a member of the parent also. So this needs to be taken into consideration. The other entity is an associate of third entity. The other entity is a post-employment benefit plan for the benefit of employees of either the reporting entity or an entity related to the reporting entity. Now here the post-employment benefit plan would generally include some charitable trust which has been formed, or it could be a gratuity trust which has been formed by the organization for the benefit of the employees, or the entirety of any member is a of a group of which it is a part provides key management personal services to the reporting entity or to the parent of the reporting entity. Now if you see this whole definition, there are various terms which we need to understand. First thing is, we need to know who is the close family member, what is control, what is joint control, what is significant influence, what is key management personnel. We also need to understand who is a what is a joint venture, associate. So all these definitions are covered one by one in the coming slides. Now there are clear exceptions stated of related parties. Just because two companies have same director in common doesn't mean that both of them are related. Unless the director is able to affect the policies of both the companies in their mutual dealings. Two venturers simply because they share joint control over a joint venture. A single customer, supplier, franchisor, distributor, agent with whom enterprise transacts significant volume of business merely by virtue of resulting economic dependence. Providers of finance, trade union, public utilities, government departments, and government agencies, including government sponsored bodies, merely by virtue of normal dealings with the enterprise. Here, you need to note that the word director over here would mean a key manager in common also. Now, let's understand the meaning of the term control. It says ownership of more than 50% voting power. Whenever you have more than 50% voting power in the other enterprise, it's called a direct control. Then it controls the composition of board, governing body, substantial interest in voting power, or power to direct by statute or agreement the financial and operating policies of the enterprise. Joint control. Here, there is a contractual agreed sharing of control or arrangement which exists only when decisions about the relevant activities require unanimous consent of the parties sharing the control. Significant influence. It means that you have more than 20% voting power. It is presumed, unless contrary is demonstrated, you can you have the authority to change the managerial personnel, authority or ability to influence material transactions, or you can participate in financial operating policy decisions. Then you have significant influence over the other party. Associate an enterprise in which investing reporting party has significant influence and which is neither a subsidiary nor a joint venture of that party. Joint venture means a contractual arrangement whereby two or more parties undertake an economic activity which is subject to joint control. Key management personnel, those persons who have the authority and responsibility for planning, directing, and controlling the activities of the reporting enterprise, including any director, whether executive or non executive. Before we proceed further, let me give you an example over here. See, it clearly states that it includes all the directors, including non-executive directors of the entity and its parent. It's not necessarily only of the entity, reporting entity, it can be of the parent also. Suppose Mr. X is a director of M Foods Limited and he owns 70% shares in R Food Limited. So Mr. X is a key management personnel of M Food Limited. Since he's having 70% shares of R Food Limited, he controls the activities of R Food Limited. So, in the books of M Food Limited, Mr. X and R Food Limited are related parties, and for R Food Limited, Mr. X and M Food Limited are the related parties. Same way, I would like to give you an example over here in respect of significant influence. Suppose there is a reporting entity, say Sans Limited, and it is having 20% voting power in R Limited and it is having 20% voting power in S Limited. So, in the books of SAN Limited, R and S Limited both are required to be reported because their significant influence. In the books of R Limited, only SAN Limited will be shown as a related party, and in the books of S Limited, only SANS Limited would be shown as a related party. Got it? Now let's go on to the definitions which we were continuing. Relative. This is the most important definition. The other terminology used for them is close family members. It includes spouse, domestic partner, son, daughter, brother, sister, father, mother. It could be also children of the domestic partner. Okay, here the term domestic partner has been specifically included in the definition. Now, say for example, Mr. and Mrs. P, they are related to each other because they are married. Now, Mr. P has 65% shares in V Limited and Mrs. P has 100% shares in C Limited. So now V Limited and C Limited will be related to each other. Why? Because they are close family members. Mr. P and Mrs. P are close family members. Now, if Mrs. P had only 10% share in C Limited, then she would not have significant influence and there was no need to show C Limited as a related party in the books of P Limited. P Limited means in the books of Mr. P. Now let's go ahead. Individuals include those who have control or significant influence, joint control over the reporting entity, or are members of key management personnel of the reporting entity or a parent of the reporting entity. Holding company means a company having one or more subsidiaries. The entity that controls the other entity is also called parent or holding company. Subsidiary company is a company in which another company holds either by itself and or through one or more subsidiaries more than half in the nominal value of its equity share capital or the composition of its board of directors. Now, this standard specifies that there are four ways in which subsidies can be formed. You can have direct control, you can have indirect control, you have dominant influence, or you have potential voting rights. Okay. And subsidiary is an entity including an unincorporated entity such as partnership that is controlled by another entity known as the parent. So in the terminology subsidiary over here, the partnerships are also included. So you have to basically see how much percentage of investment the company is making in the other company to find out the relationship of holding and subsidiary. Fellow subsidiary. A company is considered to be a fellow subsidiary of another company if both are subsidiaries of the same holding company. State controlled enterprises, it includes central and state government. Now I am showing you the related party relationships. If you could see the arrows, it shows how they are related. There is a reporting enterprise, which is going to the holding company, subsidiary company, and fellow subsidiary. Then there are individuals who are having control or significant influence or relatives of any such individual, which are going to the reporting enterprise. They are also going to enterprise in which above individuals or key management personnel can have significant influence. Then you have key management personnel or relatives of such personnel, and you also have joint venture and associate of the same. Related party relationships. Here I have included an example of the employee benefit fund or plan. I had told you before also that gratuity provident fund and charitable trust are covered over here in related party relationships. Why? That reason has been clearly given because contribution to these funds are not, they are enterprises setting up these funds and they can exercise significant influence. Because of the significant influence or control, they are covered under related party relationship. But important thing to note is contribution to these funds are not a related party transaction, as contributions are means of making salary payment to employees who are not related parties as per para 3. Disclosures. It requires disclosures of relationship involving control even when there have been no transactions. This is especially in respect of group relationships, holding company, parent company, and subsidiary company. Key management personal compensation. Here you have short-term benefits, long-term benefits, basically salary, bonus, gratuity, employee stock option. Then you have termination benefits, retirement benefits getting covered over here. All these needs to be stated here. Then you have to show the nature of relationship with the related party, nature of transaction entered into, amount of the transaction, amount outstanding of the reporting date, then provision for doubtful debts related to the amount of outstanding balances, and also We have to show expenses recognized during the period with regard to bad or doubtful debts due from related parties. Details of guarantees given are also required to be stated. The terms and the conditions based on which the transactions have been entered into. Suppose if you are letting out a property, whether it is secured or unsecured, that also has to be stated. If neither the entity's parent nor the ultimate controlling party produces financial statements available for public use, the name of the next most senior parent that does so should be disclosed. The related party relationship are required to be disclosed irrespective of the transactions that have happened. Identification of the related party relationships between parents and subsidiary is in addition to IAS 27, which is separate financial statements, IAS 28, which is investment in joint venture and associate, and IAS 31, which is joint venture. Now, in case of government related entities, there are certain exemptions, and if you enjoy that exemptions, then only the following three disclosures are required: details of government and the description of the relationship, details of individually significant transactions, indications of the extent of transactions which significant in aggregate. So, for example, there's a government company A, which is directly or indirectly controlling entity D and entity B. Now, entity A is investing in entity P and Q, and entity B is investing in entity R and S. So, in the books of the P Limited, the government is entering into transaction. So, government company, the transaction has been entered into, and the entities Q, R, S, B, and A, whatever transactions have been entered into, because the government company is holding directly or indirectly some stake in it, they are not required to be disclosed. They are exempt because of the government related entities. Now, manner of disclosure. Here we have, I have listed the nature of the transactions. I have given the related parties and name of the related parties and the amount of transaction entered with them during the year. So here you see purchase of goods is there, sale of goods is there, purchase of fixed assets, sale of fixed assets, rendering of services, receiving of services, agency arrangement is there, leasing or hire purchase arrangements are there. So in respect of these transactions, especially secured and unsecured, the transactions have happened or no, whether you have given any security for the same, that can be disclosed very nicely. Transfer of research and development, license agreement, manager remuneration, finance, including loans and equity contribution in cash or kind. Also, we can disclose over here provision for guarantees, collaterals, settlement of liabilities on behalf of the entity or by the entity on behalf of another entity. That is also covered over here. Here we have just given the name of the related parties and the description of the relationship. I have just given the various heads and the names of the parties. Practical case studies. Now let's see. Mr. X is a relative of key management personnel, received remuneration of 2,50,000 for his services in the company for the period April to June 2011. On July 1, he left the service. Now whether Mr. X will be related party or no. Of course, he will be covered because he's covered under the definition of related party. For how long he has served the organization is not important. Even if he is there for a little part time of the year, you are supposed to disclose this transaction. Practical case study 2. A holds 51% of B Limited, B Limited holds 51% of O Limited, Z Limited holds 49% of O Limited. So now here the practical case studies may look at this chart. It clearly says if the reporting enterprise is A Limited, B Limited and O Limited will be the related parties because ownership of direct or indirect or more than half the voting power of an enterprise. Reporting enterprise B Limited, related parties A Limited, O Limited, reason ownership directly or indirectly of more than half of the voting power of an enterprise. And Z Limited, O Limited, because they are associates. Any questions you can ask me, or else we can conclude the session here. Stella, I think I have done my session. You can take it over, please.
Thank you so much, Suchitra ma'am, for the making AIS 24 decoded to easy to understand. And also, again, thank you so much for joining us and also giving your valuable time.
Thank you so much.